Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Jonathan Ferro, along with Lisa Abramowitz and Anne-Marie Hordern. Join us each day for insight from the best in markets, economics and geopolitics. From our global headquarters in New York City, we are live on Bloomberg Television weekday mornings from 6 to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app. Joining us is the US Energy Secretary, Chris Wright. Secretary Wright. Good day to you, sir. Good to see you.
Thanks for having me.
Do you get to skip the line when you come into the convention centre? There we go.
I've been polite about it too, though.
Of course you do. Mr. Secretary, first time in Davos. What was your impression of the World Economic Forum?
Oh, it's fantastic to see leaders, political leaders, business leaders from all around the world gathering here for very candid dialogues. I've enjoyed it very much.
There's a worry, and I'd love your reaction to this, a worry that the president's style, yes, it generates results, but it's also turning off the Europeans. Did you feel that in your conversations with your European partners that they were offended by the last week?
I did engage in dialogues about that, and I think the rhetoric or the speculation was so over the top. It's going to be the end of NATO. The U.S. military is going to invade Greenland. These were never on the table. The president, since his arrival in office, has been how to strengthen NATO, how to get increased defense spending, how to get increased trade and cooperation between our countries. So he's here to strengthen NATO, increase the security we have against the foes that are rising in the world. Yes, he has a different negotiating style, and he gets different results. I just came from the Peace in the Middle East event. Like, the conventional approaches don't deliver unconventional results. President Trump's about delivering results. And yeah, that's a different style.
The speech has been about self-resilience, and that's been very much the tone coming out of the White House, the idea that every nation needs to look at what it has and really build that up. And that's one reason why the focus has been on oil. I just wonder, do you feel like prices where they're at are supporting the U.S. shale industry that usually operates at a higher price point? Do you think that this push to produce more oil is actually harming the U.S. shale industry?
Well, first of all, the president has one constituency, and that's the American consumer. You know, businesses have to compete to be the best supplier to consumers. But at the end of the day, the point of a free market isn't to help or protect businesses. It's to serve consumers better. And I remember 10 years ago, the shale companies struggled because oil came down to $80. And before it was $100 and their profitability wasn't great. They've continued to innovate, continued to drive down, break down prices. U.S. oil production's at a record high right now, as is natural gas production. Do they have to continue to innovate and drive down costs? Of course so. But that's what American business does.
At what point, though, does some of the oil, say, from Venezuela start to cannibalize from what the U.S. is producing at home? Something that some people are worried about, whether it takes up space at refiners or whether it just lowers prices in general at a time where they're already struggling to innovate fast enough to keep up with where prices are.
It's a challenge, but I would never underestimate the American oil and gas business or Americans across the sectors. So I don't worry so much about that. And of course, it's a different kind of crude that comes out of Venezuela. And a lot of our refineries were built to refine this heavier, more viscous crude. We produce that light, sweet crude in the United States. It's a good combination. But when you have lower energy prices, you also have faster economic growth, which means faster demand growth. There's always feedback effects here. We're going to see faster, not just U.S. growth, but global growth because of lower global energy prices. In fact, one of my messages here in Davos, talking to the European nations, the EU was a similar size economy to the United States in 2010. They pivoted, focused on climate change, forgot what energy is used for, and they've had very little economic growth. We were both 25% of global consumption just in 2010. Today, the U.S. is 28%, and the EU nations are 18%. That's the cost of expensive energy policies. And what we want to see is Europe reinvigorated, Europe to embrace lower energy prices, reindustrialize their economy, and therefore be a stronger economic and military partner with the U.S.
Well, they outsource their energy to Russia. Potentially that's why we are seeing these exports out of the United States. When it comes to Venezuela, though, do you have plans to go down there, maybe even lead a delegation of oil executives?
I'll go down to Venezuela in the relatively near future. I'll go down in the next few weeks. I'll go down to meet with government officials and look at the existing oil facilities down there. We will definitely see a number of American oil and gas companies going down as well and investigating opportunities on the ground.
Who are you going to be going down with? I imagine you're on speed dial and have constant conversations with Mike Wirth, the CEO of Chevron. But is a Darren Woods potentially feeling a little bit better? He did call it uninvestable Venezuela when he met with the president recently.
Well, that's a backward-looking comment, right? Because of course, for 10, 15 years, it has been uninvestable. So this is about looking forward, about where we're going, and who are the early movers going to be in an environment that's better today than it was a month ago. But is it fully rule of law, democratic, thriving society? Again, of course not. This is a process. We're only 3 weeks into it. So that you're going to see increased production out of Venezuela, first from the incumbent players like Chevron, and then from the new, smaller, scrappier American independents that'll go in the ground.
So wildcatters are the ones that are reaching out to you?
Yes, across the board. Bigger companies too, but the faster movers will be the wildcatters.
And are you planning on giving them these fresh licenses so if they do feel like they have the security concerns and it's good to go in Venezuela, that they could start?
Absolutely. They will start, yes. And we will move OFAC approvals for anyone that wants to go down there. We're going to let the marketplace decide that. I'm not going to choose or pick among companies. But we're going to certainly open up that opportunities together with the interim authorities in Venezuela right now. We're going to open up the opportunities to grow oil production in Venezuela. Good for America, good for Venezuela.
Not choosing and picking is an interesting one, because we have seen the administration choose and pick certain companies to develop things. Why is this a different moment?
Well, look, to do things short and quick, to immediately market the crude out of Venezuela and get money flowing as fast as possible, you got to make choices then. So immediately, when you have an immediate objective, you got to make decisions. But ultimately, we want capitalism and the marketplace to decide who the operators are, who the marketers of the crude are, and what the future of the industry is going to be in Venezuela.
What's the ultimate goal? Is the ultimate goal to take share away from, say, the Middle East and Russia? Is the goal to lower prices below $50 a barrel? What's the ultimate goal with the United States' involvement in Venezuela's oil industry?
Well, the ultimate goal was to stabilize our hemisphere, to reduce the running of drugs and guns and criminality. Venezuela has basically become a big drug criminal organization with Hezbollah's Western Hemisphere headquarters there, Russia, Iran, Cuba. So the goal of Venezuela was geostrategic, to have it as safe, peaceful, prosperous ally of the United States as it was for decades. And as part of that, the tremendous resources Venezuela has in oil, for sure, that's going to be a large part of their economy growing and all that. And is more Western Hemisphere oil production good for the United States and good for the Western Hemisphere? Sure, but it's good for the whole world.
Secretary Wright, do you think you can work with Delcy Rodriguez?
We are today. We absolutely are today. Look,
and you'll meet her when you go there?
I certainly will.
Because she was their oil minister. And Jonathan asked me this when Nicolas Maduro was captured. I used to cover OPEC. Does the United States basically have a seat at the table when it comes to the cartel?
The cartel in OPEC?
Yeah, because basically you have this pragmatic approach to Delcy Rodriguez. You're bringing in the energy companies into Venezuela, and Venezuela is part of OPEC.
I hadn't even thought about that. But, of course, we're not looking for a seat at the table at OPEC. Of course, the United States produces more oil today than Saudi Arabia and Russia, the two biggest other producers of oil. So I think we're quite comfortable with where we sit. We just want a stable, prosperous Venezuela to be good for the United States, good for the Western Hemisphere, and good for Venezuelans.
Should I tell you the answer that Anne-Marie gave me when I asked that question to her? Anne-Marie turned around and said they already have one. It's Saudi Arabia.
Yeah.
And they can lean on the Saudis to get what they want. Is that fair? Do you have enough influence on that cartel at the moment?
We don't lean on them to get what we want. But unlike the Biden administration, of course, we've embraced the growing economies, the growing freedom in the Middle East. The goal is to have a peaceful, prosperous Middle East and not a conflict-ridden, it's about bullets and shooting people and who hates each other. We want to make it free and prosperous.
Well, do you remember the first term when there was that price war? Prices went to negative on WTI, and the president picked up the phone. This was his first term at 45, called President Putin and called the Crown Prince Mohammed bin Salman. That's why I always say the U.S. has a seat at the table. The president does seem to want to work in the energy space.
He understands the criticality of energy. And, of course, during COVID, in emergency situations, you want a strong, resolute, business-focused leader.
Can I finish on security guarantees in Venezuela? I think it's important. Can we offer security guarantees to these companies that are going to develop those reserves?
No, we have no plans to do that. The U.S. involvement right now in controlling the flow of funds in Venezuela gives us huge leverage to reduce the criminality in that country, reestablish peace and better business conditions in the short term. In the long run, you've got to go all the way to a representative government, rewriting of laws and the Constitution, but that will take time. But no, the activity we're doing is moving the security situation in a positive direction, but we are not going to get involved in providing on-the-ground security for people in Venezuela. Oil and gas companies operate all around the world in all different settings. They're well-versed in those challenges.
You understand why some companies might have reservations about going in because they'll wonder what comes after President Trump and whether the next administration will have that same commitment that you have to that country.
Of course, it's an evolving environment. This is not for everyone. There's always different risk and reward situations at times, which is why the wildcatters will move first. The bigger, longer term, tens of billions of dollar investments, they're going to wait till there's more clarity in that environment. But fortunately, with Chevron there, with Repsol there, with Eni there, with Shell right next door, we already have big incumbent players that are ready to grow their investments.
Stay with us. More Bloomberg surveillance coming up after this. So here's the latest this morning. The President of the United States, Donald Trump, cancelling European tariffs that were set to begin February 1st after reaching a framework deal over Greenland. The US Commerce Secretary, Howard Lutnick, joins us now, making some waves at the World Economic Forum over the last couple of days. Mr. Secretary, it's good to see you.
Great to see you.
Let's cut through the drama. Let's get to the big point, the elephant in the room. What happened at dinner time the other night? I've heard all kinds of stories, booing, Lagarde storming out the room. What happened, sir?
Oh, this is so silly. So at the end of the evening, they called on me. I just published an op-ed in the Financial Times, and so they called on me. I gave 2-3 minutes of my FT, which basically said that globalization, right, and the outsourcing of your industry to the lowest cost in the world, right, had really harmed America, it had harmed Europe, and it had failed us, and that we need to reshore, need to take care of our own citizens. So that's basically the model. And when I was done with that 2 or 3 minutes, one person of the 200 odd people in the room booed. And I felt honored because it was Al Gore. And Al Gore booed. And I was like, really?
So Madame Lagarde wasn't throwing bread rolls at you from the back? That wasn't happening?
No, I mean, I put it in the FT. I mean, I wasn't like trying to be quiet about it. I mean, I think that globalization, right, and the idea of global supply chains and finding the lowest cost, I mean, that is just not the way to take care of your auto workers, right, who are in Ohio and Michigan. And so we're bringing that back. So think about this. When we were done we started auto tariffs, we started working on it in March, and we finished in November. And we were done. The last day when we finished, General Motors and Ford stocks each went up 10%. General Motors ended the year up 60%. If I told you on January 1st that General Motors was going to be on 60%, you would all said, oh, stop it. And how about this? On that same day, Sean Fain, who runs the United Auto Workers, called me and said, I can't believe I'm calling a Republican Secretary of Commerce to say, thank God for you and your administration. You're the first administration who's actually taking care of the auto workers of America. So think about that. You can, if you really think it through, you can take care of the company and the worker. You don't have to pick sides because we want union labor growth in America. These are great jobs. Why wouldn't we want them in America? So that's why Donald Trump wins the union vote, because he's actually pro these workers. He literally is pro these workers. It's not a political thing. It's these are great jobs for Americans. Let's go get more of them.
There's a lot of money set to come into the United States, and big bets, a ton of FDI. We could get into that in just a moment. I just wanted to stay on G7 allies. This week's been quite a week. Emmanuel Macron, the French president, has said, basically accusing the US of trying to subordinate the Europeans. The Prime Minister of Canada, I'm sure you've heard his speech, Mark Carney, the other day, said this is not a transition, it's a rupture. How would you describe relations with those countries at the moment?
I think our relations are perfectly fine, right? I described the relationship with respect to the whole, when Greenland was going back and forth before we sort of settled it with a framework agreement, right? I called it a kerfluffle. right? It's basically like if you have an argument with your spouse, that's not real, it's not a real one. It's like a small thing.
My spouse doesn't go out there and deliver a speech after that argument and say it's the end of the relationship.
Fair enough. But you're right. And I think they overreacted, and it's proof that they overreacted because a day or two later, there's a framework that makes sense, right? What did we say? We said we cared about it for national security. Right? We said we care about it in national security. I mean, it's obvious we care about it for national security because if you're going to build a golden dome over the United States of America, right? Wouldn't you prefer the Golden Dome cover Greenland? So when you're knocking out the missiles, you're not knocking them out right over your head? Like we've all seen Israel like knocking out the missiles right over their head with their Iron Dome. Wouldn't you prefer to knock out the missiles if you live on the east coast of the United States of America over Greenland, a couple of thousand miles away where there's no people, right? Doesn't that sound better? So this is sort of where we're thinking about it and how our national security team is thinking about it.
So what's actually in the framework?
Well, the framework is a national security-based framework. That's what the United States cares about. We care about our national security, and we care about the shipping lanes. So let's talk about the national security and shipping lanes, and let's see if we can't figure out a framework to do that together. And I think that's what the president truthed about. He said we're going to try to figure that out together because those were the key points that the United States of America cared about. And I think the president's been clear about it, and he just wants people at the table dealing with it swiftly. I mean, think about this. He sends out a truth. And like within 4 days, right, we have a framework agreement. Like that's, by the way, that's a pretty effective
and we had
truth,
tariffs
I have
on,
to tell you.
we had tariffs on, tariffs off.
They were
what
never
does this
on.
do?
They were never on.
The threat of them are coming on for February 1st. What does this do now for the agreement you and your team struck with Brussels? Because the legal implementation has now been put on hold.
Oh, I think it'll be put on unhold probably tomorrow. I mean, come on. That's why I said it's an overreaction. I mean, they know when the president says this is what's going to happen. I mean, what provoked the president? What provoked the president was that they sent military people to Greenland. I mean, they didn't send military people to Ukraine. Like, why are they sending military people to Greenland? It seemed like a provocation.
We spoke to the Finnish leader, and he suggested that was a miscommunication, and he cleared that up pretty quickly. There's something I want to get into with you that I think is quite important. This, of course, is the art of the deal. We talk about it on the programme all the time. The president anchors the story to the extreme and then gets a favourable deal for the United States. I think that's well understood. Something happened, though, in the last 12 months that I think is really interesting. He tried the same thing with Canada and totally upended the election in Canada north of the border. Poilievre was going to sail away with that. The reason Mark Carney's here as Prime Minister is because the President took such an assertive stance on Canada. Now, at the time, I was finding the humour in the conversation. Then the Canadians started lighting up the Bloomberg terminal, sending messages. They were deeply offended. And we've seen that damage the economic relationship with Canada and the United States. And the risk here, Mr. Secretary, and I'd love your thoughts on it and your reaction, because I think this is really important regarding the Europeans. The points you're making about Europe and have made over the last week are valid points, and they're actually well received by a lot of Europeans. But the style in which it's being delivered at the moment, some of them are finding it offensive. Do you think there's a risk here that we damage the economic relationship with the Europeans in the same way we do with the Canadians, and for that matter, derail the conservative movement in Europe that's well underway?
I don't. I think the fact is that you need to rethink. I think Europe is amazing, and it's got extraordinary opportunity and a $20 trillion economy. But think about this. If they had the right digital rules, meaning similar digital rules to the United States, we have $6 trillion worth of committed investment to build data centers in America, and we have a $30 trillion economy. So if they had a $20 trillion economy, you'd say, okay, if they had the same rules, they could get $4 trillion. Or how about $2 trillion? You realize $2 trillion for their economy, right, would be 10 points of GDP spread over 3 or 4 years. I mean, that would produce amazing growth. And let me sort of explain how that works. So we did a deal with Micron, right? They're going to build $200 billion in America. So on Friday, last Friday, we did a groundbreaking of their mega fab, $100 billion fab. And where did they do it? They did it in upstate New York and Syracuse. Now, there hasn't been industrial building in upstate New York in probably 40 years. But if you think about it, it had a huge industrial base once upon a time. So what does it have? It has power, because it has the power infrastructure for that. So what that does is it creates like this enormous uplift. And I think Europe can do the same thing. I think the UK can do the same thing. And Canada is just thinking in this arrogant, second kind of thought.
Well, but just to build on what John is talking about, it's a style question. Can you get the same results without using words like calling leaders weak or their economies decaying, right? Is it necessary to provoke the visceral feeling that we feel among a lot of leaders here and in conversations with international investors? I mean, is there any other way? Is that style more harmful than it is helpful?
Well, I think it creates listening. Like, people pay attention to it and listen to it. If you just sort of blend in, no one hears anything in Davos, right? Everybody says the same blah, 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 blah. And if you need to break out and you need to say it. So my view is, right, that Canada has never expressed to the world that they have the best deal, the second best deal in the world. The best deal in the world is Mexico, because remember, they have USMCA, which means 85% of the Canadian economy comes into the United States for zero. And there he is complaining that he's going to go to China and improve it. What's he going to do? China's delighted to sell to him, but do you think China's going to open their economy to accept exports from Canada? This is the silliest thing I've ever seen. They have the second best deal because Mexico's got a little better deal. They have 25% on the extra 15%, whereas Canada's got 35% on the extra 15%. But give me a break. They have the second best deal in the world. And all I got to do is listen to this guy whine and complain?
Mr. Secretary, in fairness, you've seen from the airplanes, you've seen about a 30% decline in Canadian visitors to the United States, if not significantly more. You've seen a similar type of decline from China. European travelers inbound have come down. There is a sense that people do not want to come to the culture of the U.S., and there is this anger about it. And I just wonder if you think that that's just temporary, or you just sort of dismiss that, or you think it's irrelevant to the actual issues?
I think what that is political marketing, right? The Canadians have the second best deal in the whole wide world. If they continue this path, right, which is a political path of a certain thing. I'm going to go fly to China. I'm going to open up my markets to China. I'm going to take Chinese electric cars and do all sorts of this stuff. Then when USMCA gets renegotiated
this year,
sort of like towards the end of the summer, right in the middle of the summer, do you think the President of the United States is going to say, you should keep having the second best deal in the world? I mean, you guys are such great friends. I mean, they are playing with a set of rules that they haven't really thought through.
I can hear it in your voice. You're excited about negotiating this, aren't you, later this year?
Well, they've sort of given a sort of a roadmap of saying, so I guess we should change the whole deal. Right? You want to be like the rest of the world. You don't want to be this favored neighbor because you've taken it so for granted that you're willing to come to Davos and say there's two hegemonic powers in the world and we're going to decide which one we're going to work with. Really? You're going to either work with the United States of America, where 75% of your economy is totally tied to it, or China? Why would you say that? I think it's political. You know, I think if we take it correctly, we should look at it as just political noise coming out of a prime minister, and maybe this is working for his election, right? Because I don't think it can be real, because if you took out the math of Canada's economy and it's doing business with the United States of America's $30 trillion economy, there's no such thing as changing what they have today. No one would vote for changing what they had today. Now, maybe they're marketing it well, but they're just for their politics. But they're surely not marketing it well for their fundamental economics for long-term the United States.
The U.S. is doing deals with China, and I'd love you to walk us through what's going on with the H-20s. Is it accurate now that basically for China to get the H-20 chips, Taiwan needs to send them to America for us to put a tariff on them to make money off it and then send to China? And is it your understanding that China might be susceptible now to these chips, suspect because they're entering through the United States?
So it's the H200, right? So that's the chip we're talking about. And Jensen Huang came to the Oval Office and he argued that this is a better chip than they can actually make at any scale, right? So if we sell them to China, right, and Chinese businesses, then they'll start using them and they'll develop on the American tech stack, and that will take some money away from the Chinese tech stack. And it's an interesting argument. There are two sides. There are strong two sides. We shouldn't sell them any, or we should sell them the H200s.
Where do you sit?
And I stand right in the middle. It was a really, really good discussion, okay? And the president decided that, fine, we'll sell the H200s to them. Okay? And he made that decision. And after he was done, he said, and you know what? I think if we do that, we should get 25% for the American taxpayers. right? Because we're creating something that didn't exist.
Do you think China wants to buy them, knowing that they're going from Taiwan now back to the U.S.,
they're coming
then to
the
China?
United States because in order to collect 25%, right, the process matter to do it right is you import it, put a tariff on it, and then export it again. Okay? And so that's the model. It's the process model to execute a plan that the President of the United States of America made, right? So that's just the execution model of how to do it. It's just process, right? And it's the same H200 chip. And the question we'll find out is the businesses in China want to buy it. That's for sure. The question is, does China's central government, right, want, when they have that same argument, do I want to give my companies this chip that they're all clamoring for? Or do I want to force them to take the pain of using lesser chips that are domestically made, but helping our domestic companies grow? And that's a question we're going to see how it goes. But I think the president put that question out there, and I think it's a really interesting one. I didn't say there's not two sides of that coin, right? Yeah. But the president thought having Chinese developers on the U.S. tech stack, right, given sort of the middle, he falls that way. And it was a really robust discussion. Both sides of the discussion were in the room. It was a deep and thoughtful discussion, and that's where he came out, and that's why he's the president.
So, just a final thought. Just listening to this engaging conversation of the last 15 minutes or so, do you fancy the Fed seat over at the Federal Reserve? I can see Commerce Secretary in the Eccles building.
I fancy it?
You can see him in the Eccles building.
Oh, my God.
Can you imagine the magic of that news conference? These news conferences are pretty dry.
I would definitely sign up for the news conference. I'd be going.
You know what I call that? I call that an Amy Winehouse. No.
I call that box office, sir. It's good to see you. Stay with us. More Bloomberg surveillance coming up after this. Let's stick with the economy, the positive outlook. Joining us now is the Bank of America Chairman and CEO, Brian Moynihan. Brian, good to see you.
Yeah, good to see you. Howard and I were on a panel yesterday, and then yesterday? Yeah, maybe the day before yesterday, then lunch today, and actually we're going to do another public venue where we're talking about how you raise the money to do all this investment he was talking about. So he's bullish on America, and he watched part of the interview. It sounds like he said that.
You guys are too?
Yes.
So let's start with the GDP forecast and the outlook.
So our research team, our research team is one of the best in the world, led by a woman named Candace Browning-Platt, and they all come out, and they raised their GDP for the U.S. to 2.8% growth for 26, right before we came to Davos. The world about 3.5%, and they raised it to 0.1. And the important things, I think, to think about the U.S. is you think about the travel from the last time we were here. Last time we were here, we probably had 2.5% for 26. Then Liberation Day, it drops all the way to 1.5. And then as a settling in of there's the four primary policies of the Trump administration: trade and tariff, tax, immigration, and deregulation started settling in. We've raised it back to 2.6 and now 2.8, and that's bullish. And then underneath it, we see what the consumer really does. And if we could talk about that, the consumer spending was strong in the fourth quarter. When I talk about that, it's $4.5 trillion, our 70 million consumers, which we're blessed to have, put into the economy a year, and that for the fourth quarter, that grew about 5% over the 24's fourth quarter. And so far in January, it's growing a little faster than that. Now, you got to be careful about 2 weeks don't make a quarter, but it's staying up there strong. Well,
let's pair that GDP forecast with the bank and the business lines then. What position are you in to take advantage of that better growth story in America, and where do you expect it to show up? Well,
because of who you are, and we've been part owners of this company a long, long time ago, and Mike's built a good thing around the markets business. That's what you're always interested in, even though there's all this other stuff that makes a lot of money. But look, if you look at Jim DeMar, who's now co-president of the company, but his team in markets this year had their last quarter had their 15th consecutive quarter of year-over-year growth. They just keep walking up 10% up for the fourth quarter. If you look at investment banking, which was kind of interesting, so Matthew Coder and team, early in December we thought we were about $1.5 billion, and I went out at a conference and told people that, and lo and behold, we ended up $1.605 billion, and that made 2025 the second best year of investment banking fees in our company's history. And the only other one was pandemic, when everybody did a lot of financing. And next year we think we're bullish because the pipelines are full, and the broadening out of the revenue stream into the IPO markets and other things, which got started a little bit this year, but have been pretty depressed for a while. So that's coming. And then deals, just the deal flow. People can get deals done. When I was here a couple Davos ago, the regulatory burdens were getting so high that you couldn't honestly tell a client who's trying to do a $5 billion deal to do it, because you said if you're going to stabilize your company for 6 months, a year, trying to get this through, and you don't get it through, is that worth it? And that's sort of off the table. And even our industry, even though we can't do anything, 6 months approval timelines are back to where they should be.
It seems like there is an incredible amount of bullishness here at Davos about deals, about IPOs, about all sorts of transactions, and some of the issuances of debt and equity. At the same time, there's a real concern about affordability. Yeah. There's a concern about how well the consumer is going to be able to face off with inflation. I'm just wondering if this is the year that we see the two come together, because last year they didn't come together. We saw the same kind of joblessness in terms of the growth, and we saw the same kind of lack of enthusiasm in sentiment surveys.
Yeah, so if you look through if you think about last year and think about how bullish people were last year because about the United States and the change in regulatory regime and things like that, in April things changed, and then by the end of the year it changed back. And so I think that had a lot to do with it. If you look at the consumer and what we see, that spending level is not consistent with people who feel they're threatened in the future, and they're spending on all kinds of things. Now, if you look at the research team, the Bank of America Institute, if you look at the work they've done, if you put three groups of customers, lower income third, middle income third, upper income third, they're all growing, but the middle and upper are growing at a faster rate, and frankly that drives a lot of the growth. But if you look at what everybody's spending on, they're spending on going out to eat, they're spending on booking vacations, they're spending on essentials. So what's the affordability? It's the inflation that people remember, and that is going to take a while for people to kind of put in the rearview mirror, because people can remember. It's not too hard to remember 5 years pre-COVID where X was cost you, a gallon of milk cost you this, a gallon of gas cost you that, your rent was this, and with that explosion in prices, wages also went up, but the consumer thinks more about the price side, and then the question of will it turn over and get back in sync, and that's what's in those surveys. But if you watch their activity, and I'm a big believer, they'll tell you one thing, watch what they do, and that's what they're doing as of last Friday in the consumer base across 70 million people, which is a pretty good sample size.
They're spending a lot, and maybe they would spend even more if there was a 10% cap on credit card rates. I mean, look, this proposal got a lot of attention about a week ago. It feels like 3 years ago, and people pushed back and said it wasn't realistic, it wasn't feasible. We had Jamie Dimon come out and discuss about how try it and see what happens. What's your take on that? How realistic are you seeing those proposals as being? So
if you step back, we're all for affordability in financial products. So you guys have followed over the years what we did on overdraft fees, taking down by 90% over the course of 15 years. What we did on having a $500 loan account for $5, no interest rate, you could borrow an emergency loan of $500. 8 million customers have used that over the last several years, to give you a sense. So, and then we have a no-frills credit card, no rewards, and other stuff that people might attribute. That is low rate. It's not all the way down at that rate. So I think the question is, can we figure out a solution where you can avoid the equal and opposite reaction, as our friend Lafayette said in the Hamilton song. Every action has an equal and opposite reaction. So the equal and opposite reaction we all talked about last week. If you actually make this a policy, it can reallocate credit. That will slow down spending. It will slow down credit availability, and that might not be what you're trying to achieve. So can you do something on a go-forward basis on the limited things? And even 1 year, if you had to go reshuffle the whole deck, that would be pretty interesting and to cause a lot of change in people's views of what they have available for credit. And you want people to have available for credit because that gives them the courage to spend. And so we're trying to figure out, we're all working, trying to figure out, okay, given the affordability, given the thought process, is a way that we can do something that might help without having that equal and opposite reaction, because that would not be good. Our point is to get the credit losses down to the point where you can afford that rate, you actually can never have a charge-off. And you start to think about who can get credit, that's the thing. So we're working hard. We're trying to come up with solutions like we are on some of the proposals around mortgage and 401k usage, and trying to think of how you maybe can move the transfer of wealth faster by giving people in my age bracket the ability to move a 401k balance to help their kid buy a house or something like that. We threw that out to Howard yesterday. There's these ideas of letting people use their own 401k with less, they can borrow from today, but there's a way you can actually just take a withdrawal so they don't have the added debt burden. And then you got to work on the supply side of housing. And the president was interesting. Yes, he's sensitive to the issue. If you bring down house prices to make it affordable, is that the right answer for everybody? But on the other hand, when you have the kind of over demand in some of the cities we work in, 30,000 units in Charlotte, 20,000 Boston, 30, 40,000, 100,000, whatever in New York, you could build a lot before I think you'd have a major impact on the downward trend in prices.
Well, the DJT imposed deadline of January 20th has come and gone for the credit card caps. Have you spoken to the administration about this issue and talked to them about the potential counterintuitive problem with a 10% cap?
The team and I talk to administration all the time about these policies and stuff, and they listen, and they're trying to figure out the same issue from their side. How can they make America more affordable? And I think the number one thing we can do to make America more affordable is keep everybody employed and earnings growth. In our client base, across 70 million people, we see a lot of paychecks come in, and that's growing at 3%, 4%, and that's a good number. And so, that wage growth continuity will ultimately make people feel different about it. But it's completely understandable why they feel this sort of unevenness of how these things came into their household and then what they want to do about it. And then rent affordability, we've given them the types of ideas I talked about.
We need to see some better hiring as well. Can we talk about hiring? The AI story, it's difficult to understand what's happened with hiring in this country, in America, over the last 12 months. What do you think has happened? What's your understanding of this drop-off in hiring? Is it a supply-side story? What do you think it is?
Well, I think there's a concern of availability of labor because of the population growth, immigration dynamics that I think, again, the administration is trying to get much more fine around exactly what they're doing and not threatening people who've been naturalized citizens and things like that. And that was never what they're intended to do, but people started reading it. So I think, and then if you looked at our small business surveys, labor availability became an issue again and hadn't been for a good while. And so I think that's something we've advised the administration to be mindful of, because you don't want that to become a constraint on people's views of growing. Now, the big hiring story here, where Davos, and everybody keeps saying this year's about AI, last year's about AI, the year before it was about AI, the year before it was about AI. In 2019, the premise was the fourth industrial revolution, which was AI without just saying it. And so it's not a new theme. And so I give you, since the first time you probably asked somebody leave aside the pandemic, say post-pandemic, about is AI going to cause you to change your hiring? Let's call it 4 years. Let's call it 3 years. We hired 65,000 people at Bank of America. 2,000 kids out of school, plus out of school every year. Now, and that's with a turnover rate 8%. We got to hire, in the month of January, we'll hire like 1,300 people, and we'll have the same head count we had the month of December. Are these people doing exactly what the people left? Sometimes those jobs got eliminated. But that's what management is challenged, is how do you think to make the changes we got to make, the transformations, to make the customer experience the best it can be, to grow the company and to manage expense. And that means you have to really pay attention to the headcount movement, and that's why we watch it carefully.
That's where the tension is, though, I think, for a lot of people. Yeah. You've got the societal problem on the one hand, and on the other hand, you've got the opportunity. Yeah. And the opportunity is to do even more with what you've already got. Yeah. And that's the productivity story. Yeah. And that's what you're selling to investors. That's the pitch at the moment, isn't it?
So we had 285,000 people in 2010 when the team took over. We have 212,000 people today. And you never heard anything about labor dislocation because we just kept planning ahead. But that's the application of technology. Just take the consumer business, and I showed at Investor Day, 100,000 people to 50 and make it simple. And if you look at that, the business is 3 times as big in terms of transactions, activity. But that's the power of all you've got 8 devices sitting on the tables in front of you and the connectivity and what you'll do.
Just 2.
It's a combination of AI plus alerts and things like that. People that get focused on just, Erica growth in our case, you say, no, there's literally 1 billion alerts that go out, which is basically artificial intelligence. People set up in advance to tell them things go on. You don't need them to go into Erica to ask if a check went through my account above $2,500 if you set the alerts.
You said something that we reflect on a lot on our show. You said a lot of things, but one thing in particular, that the business would grow, but that your staff would stay about the same size. Yeah. And you said that about a year ago, maybe 2 years ago. That's a near-term phenomenon. Yeah. In 5 to 10 years, will it be the same, or will it start to change in terms of actual shrinkage?
Well, if Howard's right, his view of growth, we'll need a lot more human content to keep up with it. And I'll give you the historical context. In 2019, I was in a room downstairs, and the people were wringing their hands, and that's the way they do at Davos, that, this technology is going to take away the jobs. And so in preparation, I said, I've got to give some hope here. So I went and did the research. In 1969, America employed 80 million people. In 2019, we employed 160 million people. I think there was a lot of technology and change that came from 1969 to 2019. none of that stuff in front of you was available. You wouldn't have had a computer at work. You wouldn't have email accounts. You were still getting charged by the minute for phone calls. And think about that change. And think about we absorbed 80 million more people working. So I don't want to be Pollyanna about it, but I think you have to be optimistic that if we can grow the economy and grow the thing, we will absorb. And by the way, the population of the U.S. is very modest without immigration, and there's a natural 2+% of the people, or whatever it is, die every year. It's morbid, but that's what happens. And so you have births that kind of replace it, and people retire. And so that's why I think management's core challenge is to manage this through and get employees to take the spirit and help drive the growth in the company and be a part of the solution and help us make it happen. And my guess is, it might incrementally move headcount, but if we manage it through attrition and retirements and stuff, we ought to be able to manage the outcome.
How did we ever live without the Bloomberg terminal? Eh? What was that ever like?
I don't think I ever did.
Brian, just a final question for us. You mentioned Howard.
Yeah.
We talked about it, we joked about it at the start of the conversation, the relationship with the White House. How would you characterize it, in your own opinion, right now?
Oh, look, you always want to get an invitation. This is Davos, the place of invitation. So we invite you guys someplace you want that invitation. So the relationship's good. We do continue to give lots of ideas. And it was ironic that what was fun, we had a client dinner last night, and Howard came to talk to clients. It was delayed as they finished up the news on Greenland. And he was able to come in and talk about what happened. And those were international clients who admittedly were confused for 48 hours. And what I've tried to do with the administration's policies and talk especially to people outside the United States to say, listen to what they're saying and you can figure out what's going to happen. But don't confuse security with a trade policy. They wanted to get action, and they did. And that's a great thing. And you saw, leave aside the market reaction, which can go up and down on a day. What you saw is the clients say, okay, I got it. Now let's go set the business plans that will help have that growth in the future.
This is the Bloomberg Surveillance Podcast, bringing you the best in markets, economics and geopolitics. You can watch the show live on Bloomberg TV weekday mornings from 6 a.m. to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.